Let's talk about taxes and business, and actually who pays taxes. Hi, I'm Justin Hitt from Sustainable Wealth Secrets. I got in front of me right here, and I'm putting this all in a special report, a tax assessment for $1,084, personal property taxes in a business for $5,200 in purchased value of equipment. So basically that's how much it costs for pretty much all the equipment in my business, which includes a couple computers, iPad is included in that. It includes a network switch. It includes some accessory type items that I use to basically write and type and communicate, which is my job as a consultant, as an advisor. And it's $5,200 in purchase value, except the fact that most of this equipment is more than 8 years old. This equipment has no resale value. It has depreciated to zero, but evidently I still have to pay personal property taxes on it. And it has a zero value right now, actually, if I was to resell it or give it away even, but I'm being charged $1,084 in personal property tax. Now, the tax rate is supposed to be 2% of the goods. This is 20% of the goods. Needless to say that I'm pissed. But the truth of it is businesses don't pay taxes. Businesses pass on all their taxes to the customer. If you ever look at the receipt in a restaurant, you're going to see food taxes. You might see specialty taxes. If you go buy a car, you see all the taxes broken out. The business itself does not pay taxes. All taxes are passed along to the customer. And even if the customer doesn't receive those taxes directly, they receive them indirectly through the overhead of the business worked into the numbers. Now, taxing and big government really helps large corporations, and here's why. Now, they say they don't like large corps, but they help them because a large corporation can absorb that cost in a wider variety of charges or customers or services. Where a small business, on the other hand, really has their core services, and they have a very limited overhead to handle the administrative part of this type of thing. So in my case, the personal property taxes, I failed to file my personal property taxes on time because when I asked my CPA and I asked the bookkeeper, hey, does this equipment have any value? Should I be paying personal property taxes on it? They both said no. And so I didn't file the report. Now, I should have filed a report disposing the equipment. However, I didn't dispose of the equipment. I'm still using an iMac from 2007. Okay? Because it works okay. It's not wonderful. A newer computer would be much greater and much better, but I don't buy new equipment if I don't need new equipment. And here's the thing. The state of Virginia has a minimum of fixtures and furnitures, which is $25. So I proposed the question to the Commissioner of Revenue, if I bought a $100 ink pen and I bought a $50 typewriter, which would I have to pay personal property taxes on? Well, I'd have to pay personal property taxes on the $50 typewriter, but not the $100 ink pen. To me, a computer is a $100 ink pen. My iPad is simply like a television. It's like a small little typewriter that's electronic. It's the modern version of a typewriter. My computer, it's the modern version of just basic pen and paper. Yet I've got to pay property taxes on the computer because it's a category of fixture. I also have to pay personal property taxes on my desk, which I bought used for $150. And the desk, though, it has an assessed value of $450. So if the one case where they did look at my actual items, they believed it was worth more than the $150 I paid for it. Well, if it was worth more, then somebody would have paid more money. My point being is that businesses do not pay taxes. Businesses pass those taxes along to their customers in increased costs and in sometimes lower quality goods. So here's the challenge. If you're going to build sustainable wealth, there will be a case where you have a lot of money, whether you have a big income or you have a lot of assets. Those outside are going to look at that and say, look, he should be paying his fair share. Their assumption is because you've accumulated wealth that you have done so by not paying your fair share, If you were paying your fair share, you'd be poor just like them, because they know how heavy and oppressive taxes are. They know that they're paying sales tax on every purchase they make. They know if they eat lunch in the city, it costs more than if they eat lunch out in a county somewhere. They know that all these taxes stack up, yet they still pay collectively less in taxes, federal, state, local taxes, than the majority of those who have high wealth. Yet those who gain wealth know how to structure their business, their dealings, and their interactions around financial systems in such a way that reduces their tax liability and position. So, for example, my business is primarily a freelance copywriter or freelance writer. I write reports and materials. I promote my business through a paid newsletter. The paid newsletter kind of covers the revenue for the staff necessary to create the newsletter. And then I deliver consulting services. From time to time, when I'm delivering physical services, I actually bring in a subcontractor to do those work, so I don't have to invest in large pieces of equipment that wouldn't be used all the time. So my business is essentially a telephone, computer, and kind of like a day timer. That's about it. That's the minimal for my business. Now, of course, the telephone has costs and has equipment associated with it. The computer on my desk has costs and equipment associated with it. But I consider a lot of this equipment, like for example, I'm looking at these little My Passport Ultra mini drives that we use to put project files on. It's a disk drive. In 3 years, that has no value. In fact, it could be dangerous to use as an everyday project disk drive. It's probably not a big deal to use as like a USB drive or something like that. But ultimately, I would be buying every year new USB drives, new disk drives, because they wear out. And now I've got to take them off of my inventory and put new stuff on the inventory. And ultimately, it's time consuming. Time is money when you understand wealth. When you also understand wealth, you realize that you don't have to pay your day-to-day expenses. You don't have to pay your overall taxes in the sense of directly. You will have deductions to reduce your taxes. You'll have customers to finance your taxes, and ultimately some margin left behind for you. Of course, if you're paying yourself first in tax-deferred accounts, for example, you can also lower your liability. Now, I'm not here to give you advice on reducing your taxes. You really ought to work with a qualified tax lawyer or qualified CPA or financial planner, fee-based financial planner. But I'm here to say, though, that businesses are in the worst possible position. Governments have it all wrong, believing that businesses should be paying more. They don't realize that the revenue, 100% of the revenue from a business comes from the customer. And if the business is going to pay more, the customers will definitely pay more. And the customers are the constituents of these elected and non-elected individuals. And so if you've got somebody making $39,000 a year who's a clerk and they're going through paperwork to see who's filed and who hasn't filed, and they see somebody making $200,000 a year, $300,000 a year, they might think, oh, this person can afford more taxes. Well, they don't understand, or what they don't connect is that as that income increased, so did liabilities, so did the need for insurance and various kinds of insurance. So did the cost of maintaining equipment to run that business, and that every year they're not making $200,000. Sometimes you could have a bad year. In the case of some individuals, they might have COVID came along, the economy gets shut down, they end up in a divorce, they have loans that are outstanding and no revenue to cover it, they have taxes that still come on. There's all this stuff that happens where an employee can just simply go to a different company. They get laid off from one, collect some unemployment, go work someplace else. Now, both the poor person and the ultra-wealthy person both have the same objectives. And those objectives are to have someone else's money pay for their lifestyle. The difference is the wealthy individual knows that they can deliver value to entice others to pay for their lifestyle. And they can deliver that value over a wider variety of people. So, for example, Elon Musk produces the Tesla. Now, Elon Musk specifically doesn't produce a Tesla. He doesn't go down the assembly line and build each Tesla himself. He has staff people and researchers and engineers and manufacturing facilities that are building the Tesla. So Elon Musk's wealth and income is actually in the people who make possible the Tesla. And so he might be making a huge salary today, but if he's reinvesting that salary, he might have $100,000 in income, and he might have $100,000 of cash flow out or expenditures out that are covering things like reinvestment into the company. It might be reinvestment into publicity and relationships that help the company grow. He is working for the company as much as any employee, yet has all the risk and responsibility. To look at Elon Musk and say, well, he makes several $1 million a year, he can afford higher taxes. So we should have a graduated tax system where the rich pay their fair share. Well, you're saying the rich is going to pay more because the fair share would be everybody paying the same percentage. I know for myself and many of my clients, our collective taxes altogether, including sales tax, food taxes, local and state taxes, federal taxes, and then different types of taxes that are built into like the purchase of a vehicle or the property taxes, personal property, all this. There's like a huge giant list. I know that many of my clients are paying 60% in taxes. So of their revenue, of their earnings, they're paying out 60% into taxes. And very often these taxes are taxes they collect on behalf of employees. So employees, when they get a paycheck, whatever amount of money that's on your paycheck, that business has paid that same amount of money in taxes. So they collect some of the money from you, and they collect some of the money out of their own revenue stream, and they pay the taxes. Well, imagine if those payroll taxes were not there, the business could give you all the money. Now, you might be saying, well, the business wouldn't give us all the money because they're greedy. No, they would give you all the money because the competition would be there. People work for their net check. If you want a bigger net check and the company has a little bit of extra revenue and your quality and you're delivering value and you're useful to the organization, they will pay you more because if they don't, someone else will. See, this is what's very important to understand. And the last point that I'm going to leave you with. When the city of Martinsville shakes me down for $1,000 on equipment that is old and out of the way, I'm in a position where I can just shut down a business. I don't necessarily need the business revenue. It's not my only form of revenue. In fact, it's annoying a lot of times to deal with personal property taxes and 40-page tax returns and a lot of the things I deal with every day. The business could be ran in a different way. It could be ran not at all. Doesn't matter to me. And so when they shake me down for tax revenue, because they didn't properly manage their books, because they need the money, I can simply say thank you and shut down the business. I'm going to cut them a check. Actually, with late filing penalties, I owe them $1,193.32. And by the way, folks, I have all of this evidence and material in a special report that I put together that talks about how to objectively look at your tax situation and adjust what you do in such a way so that you maximize your earnings. If I've got to pay out, I think the business overhead is $30,000 to $40,000 a year, and on top of that, I'm paying extra in taxes, and I don't see the money coming back into my pocket that justifies the $30,000 to $40,000 a year I invest in my business, then I can just shut it down. Now think about that. In the mind of the commissioner, who makes more than I do in some cases, the mind of the commissioner is, oh, you can afford it. You can afford it. You can spend $30,000, $40,000 a year for a business that barely breaks even. And that's the truth about a lot of businesses. A lot of folks on the internet that you see that are talking about all that. I'm just telling you the truth. I'm not so rich that I can just walk away, but I am in a position where I can make decisions. And that's what we want for you at Sustainable Wealth Secrets, to be in a position where you can make decisions that benefit your long-term interests. So in this case, I'm shutting down the business. I'm going to send them a letter. I'm also going to support any incumbent that's up for election on the Commissioner of Revenue because I think this is silly. I've sent them the paperwork in. I've asked questions about the equipment. My CPA tells me that I don't need to track a lot of these things because if I'm buying a $50 disk drive that's going to be worthless in 3 years, then it's an expense. It's a consumable expense. Now, again, it's different if I bought a drill press or I bought a manufacturing piece of equipment, but I'm a professional services provider. And I've talked to local business owners in the area. Many of them just simply lie on their property assessments. So we're asked to provide a tangible personal property listing. They simply do not put things on their tangible personal property listing. Now, if someone ever physically came to their location, they would see a manufacturing piece of equipment or a 3D printer or something like that they use to build things in business. But ultimately, I don't want to be like that. I simply want to provide them an honest list. I have maybe 8 things on my list. So in this special report, I include a list of my personal property. I will simply dispose of all the personal property. I will simply close down the business. I will talk with and partner with somebody else that's running a business outside the area to handle the newsletter publications and anything like that. So if you're a paying customer, you don't have to worry about not getting service. We'll just do it a different way. I'll do it as a 1099 contractor, and I'll pay a little bit more taxes on the money I'm earning, but I'll have a lot less overhead. So my net, and see, this is the key, my net will actually be higher because I won't have the contributed overhead. I won't have to be filing paperwork. I can spend more time on servicing of customers. There's employment arrangements. I do have some clients that are statutory W-2s. I have some clients that are 1099 contractor where I work through an agency. And I have some clients that just pay direct. So I have enough income streams. So here's the takeaway lessons. First off, taxes are not paid by businesses. They're always paid by the customer because 100% of the customer's revenue comes from, 100% of the business's revenue comes from customers. Number 2, get yourself in a position where it's no big deal to pay taxes. That's just the cost of doing business. But if taxes become excessive, that's number 3, understand your net cash flow. You want to know your net. You want to know that you're making money before taxes. You want to know that you're making money after taxes. Because if you have the same money going into investments and you're making 4 or 5% interest risk-free, and there's calculations that we talk about to do these things, then you'll be better off not running the business than running the business. The same thing with mortgages. The mortgage deduction's nice, but there are cases where it's better to rent. Or it's better to buy it out completely and not have a mortgage. These are functions that you want to think about when you're talking about sustainable wealth. And final point is have the courage to walk away. I have a little spat. I'm a little upset here. I'm frustrated. I think they're shaking. I've heard from a lot of other business owners that they're being shooken down for taxes. I've been levied several times for so-called having employees in my home when I was hiring contractors to do landscaping work. And I was hiring carpenters and construction people to do work around the house. I also have housekeepers and a personal assistant that was at the house. I didn't go into the details that this is helpful for somebody with Asperger's and ADHD, but ultimately, the city came down on me and said, you can't have employees in your house. I'm like, well, they're not employees. I've hired them as their service contractors. I'm paying a company to come do this work. Oh, well, prove it to me. And I'm thinking, what the hell? What are you guys sitting outside my house watching the people work in the yard? I'm trying to improve my property. I'm trying to improve my environment. I'm trying to put in place the right people to get the results that I'm looking for. And you want to tax me on it? You want to fine me on it? You want to sanction me? I don't need your permission to earn a living and to have a livelihood. And so, again, I want to stay within the law. So in this case, I'll pay the stupid tax. I don't care. And it is a stupid tax. I should have known better. I should have had somebody else taking care of the paperwork to make sure compliance was straight. And I'll shut down the business. Now, some of these newsletters, and I'm telling you right here, we will present them as a hobby. This is my hobby. I like to tell people what to do. So I have a podcast and a newsletter, and we will change things to donations rather than payments. Now, it's a mandatory donation, so you won't get, well, actually, people do get the newsletter without a subscription. I'll tell you that right up front. There's business partners, strategic partners, there's co-op relationships, but ultimately, I'm going to take a sabbatical from the consulting side. I'm going to take a sabbatical from direct payment. You can still hire through 1099 engagements. You can hire as employee. You have to make the deal sweet enough that I would take the options that you're handling. You'll be responsible for all the paperwork and compliance, and I'll simply show up to do the job and deliver the results that I'm here. The higher you get up the food chain, the more you start to earn, the more you realize that you can pretty much do anything. Actually, Zig Ziglar said it best. You can have anything in life that you want if you help enough other people get what they want. I don't want to have a city or a state or a federal government breathing down my neck. I don't want people monitoring every purchase my business makes and making me justify whether it's a legitimate business purchase or properly classified. I want to have the freedoms that income and money buys, and I have the ability to make choices. Do you? Could you walk away from something that's not profitable? Do you have the emotional fortitude, the insight, and the accurate thinking to say, I'm just going to stop doing that? If you don't, then you're in the right place. If you do, you're still in the right place. I'm Justin Hitt with Sustainable Wealth Secrets. If you have any questions about what I've covered today, visit me at www.sustainablewealthsecrets.com. You can still call my offices and leave a message. You can send in a message over the website itself, and we'll get back with you. We will be answering a lot of questions in the group Q&A calls. I want to thank you for your time and dedication to be a part of what we do at Sustainable Wealth Secrets. I'm Justin Hitt, here to help high-income professionals and entrepreneurs keep more of what they earn and build wealth that cannot be taken away. Thanks for listening.